The message from my mum. Are you seeing the impact of Trump's crazy as shit statements on the shares? My managed fund earnings have dropped almost half in a month. Original investment there, but not earning much. Main thing is, it will eventually recover. Just sit tight and don't do anything. I reply, it just means the investment is on sale, is what I've realized. Mum replies with a smiley face. What are your thoughts on that? And should she be stressing as much as she's stressing?
Well, what are your thoughts about that? How do you feel that you've advised your mother in this moment of maximum emotional impact?
Well, I thought I knew, right? But I started looking into, well, I haven't actually looked into it. I've just talked with lots of people about it, and I don't know how much they've actually looked into anything either. But essentially, it seems like in the States, there's a lot of hectic stuff going on right now, and essentially they're sanctioning a lot of foreign countries by a tariff. So it's like they're essentially charging a fee to trade, right, in the States. And so it's supposed to be better for the United States government and people, but I don't know. I don't know anything. I was just like, fuck, you'll be all good, Mom.
What are you, okay, so when you're visualizing the best case scenario, the most probable case scenario, and the worst case scenario of your mother enduring this awful and I think very common emotional tailspin, like what are you worried might happen that without the right frame of mind, the right piece of emotional guidance from her son, like might happen?
Yeah. What am I worried might happen? I'm not worried for the immediate term, and I'm not worried for the long term. I just know that over a long enough time horizon, she will kind of get back to where she is, given that these managed funds perform, right? But that's not guaranteed when you sign up. But I don't know what the stats would be on like how often things like this crap out. But generally they rebound, right? They follow the most successful businesses in any given market, and it should be all good, right? In theory. Unless like the country like goes to war or something.
Right.
Yeah.
So, okay, so in personal terms, you're scared, like how does your mom play this badly?
Well, if she did it horribly, she would like take it out, but she's saying she's going to chill.
So impulse sell.
Yeah, yeah.
So you don't want her to impulse sell. No. Why don't you want her to impulse sell?
Because eventually, if she stays in it, it should go all right, and should be able to get back what she lost.
Yes.
But it's not even lost until you take it out, right?
That's a discerning point.
Yeah.
And so essentially, what is like a realized loss versus an unrealized loss? What is a realized gain versus an unrealized gain? I agree. And so, I mean, I guess, okay, so anytime that this comes up, so you basically are saying that your mother understandably sent you an emotional text message about volatility under the weight of volatility. And so for me, like the most important thing to distinguish between that I have really never, or at least very uncommonly heard people distinguish between is volatility and risk. And so could you take a crack at that? Like what would you say is the difference between volatility and risk?
I guess my personal take with the time and effort I've put in so far, defining volatility is, I guess it would be the fluctuation of share prices, and that's it really. And there are periods where share prices are more volatile depending on the market they're in. Whereas risk is all down to perception, right? Like for one person, an insane risk could be an insane come up for another. Yeah, you know. So
from where I'm sitting, volatility is, and because obviously the term risk could be made so complex in so many different form factors, but for me, in the context of what your mom was sort of impulse and emotionally texting you about, but good that she was like expressing herself. Yeah. But essentially volatility is something bouncing up and down. Risk in context is something permanently dropping to zero. And I think that can be quantified. That could be quantified as an inevitability in certain circumstances in advance. And in other cases, it's not, you can't see it that clearly. Now, the most important distinction that I think it makes sense to draw in context is that volatility is not risk. And volatility is not risk for the same reason that a mood swing is not a death. And so when you're looking at like what is currently going on with the US and therefore the world, we have it that a president can come in like an absolute bat out of hell for 4 years max, 8 years in Trump's case, this time 4 years max. I guess part of the math would be, and this is where things start to get really subjective because it becomes unknowable, invisible. We're much more in the realm of like faith and religion than we are in sort of like math and science. But like, do we think that this is a short-term mood swing of the global economy, of the US putting up respectable leadership, however it is that you want to like confine this? Is this a mood swing or is this like a death? Is this creating a permanent and inevitable drop and downfall to zero? Because that would be risk. Anything else would be short-term volatility. Does that make sense?
Yeah, that makes sense. I guess given the stuff that's going on geopolitically, I'm not like a super like adamant follower of these kinds of spaces. But would you say, based on what you know, that it's like a more challenging period for the global economy than recent times? Or would you say that it's just going to be a relatively short period of time?
To be perfectly honest, I mean, I think we talked about this during our first deep dive. There's two ways to think about this. Some people can think about it in both ways alternatingly. Some people would prefer 99% one way, 1% the other way. If we're talking about investing, making decisions about what to do with your dollars, every dollar you've ever made, every dollar that you're ever going to own, what you're intending to leave your family, personally, I find much more utility in thinking about things on a micro level. So company to company, if you were going to broadly diversify, maybe like industry to industry, economy to economy, versus on a macro level. And that is for more reasons than I think we'd have time to get into now. But one of the reasons among so many others is that you can, in my opinion, pretty easily make heads or tails sense of something if you're confining the scope of what you're looking at. And so in the context of, to me, one part of the reason, among many other reasons, that I prefer focus investing, fewer investments that you intimately understand versus broad, is that you can make heads or tails of it pretty quickly. So I think I mentioned this before, but the movie Network, written by Patty Chayefsky in the 70s, there was the great line, "Companies are the new countries." Are there companies whose existence is as assured or more assured than most countries? And if that's the case, does Donald Trump, Elon Musk, whoever, does their histrionics actually have any material impact on the guaranteed survival of that company? If the answer is no, then risk is not in the picture and you're just dealing with volatility. On the other hand, if there is a company or country or whatever where their existence is very much imperiled by what's currently going on in your perception and in the combined perception of everyone that you've studied, coming to these conclusions, hopefully independently on your own, then we're moving beyond volatility and you're actually in danger. But generally speaking, this is kind of a non sequitur, but not really. I found that like Joey Public and like the average person, especially the average tribe of people, tends to always at any point be screaming loudly, short-sightedly, and negatively about something. For some reason, I'm thinking of the book Game Over, How Nintendo Conquered the World. When Japan brought Mario, which now is almost like Disney in terms of how like teeny bopper and innocuously it's perceived. But when that first came to the US, NES, Super Mario, it's the 2D platformer, people were screaming about not only how much time was going into video games, but how the sort of like Japanese ethos was now infiltrating the American consciousness. And you had this guy that wasn't allowed to move backwards, that was constantly barely avoiding death and frequently dying, and how that was like poisoning the culture. And that seems ridiculous now, but it would have seemed mainstream. It would have been the water that you were swimming in like 1991. And so that is not to like downsize or underplay how serious the shit that's going on right now is, but it is to say that most of the time, what seems to be the most inevitable downfall, doom scrolling, inducing thing tends to be not as big of a thing a couple of years after the fact, much less a couple of decades after the fact, than it seemed at the time. And so to me, that would be the biggest thing. Of course, if your genuine perception was that this was going to somehow run into like a World War III, whereas, as I believe it was Einstein said, like the World War IV after that was going to be fought with sticks and stones and it's going to result in like the downfall and collapse of our entire civilization, that's a different conversation. Personally, that's not where I am with this stuff. I think that luckily, like, the American system was built with more like checks and balances and stress tests and like durability. The nervous system is more reliable than that, but that is profoundly subjective and you can feel any which way you want to about it. I just think that, to quote one of my great senseis, the great sales coach, Mark von Musser, if it makes you poor or disempowered, or in this case, just shitting your pants level terrified, like you need a new belief. That belief is not serving you. And so if the belief is objectively not serving your ability to like get through the day, get out of bed, get where you want to go, is it possible that replacing it with a more constructive belief would be preferable for you?
Where my head goes, like hearing that, is like there's a lot of people that are struggling to eat, right? And so I guess for them, it's about getting that space to get to a point where you can shift that belief. Just like thinking about the people that are the worst off. But when you can get to a point where you shift that belief, where's your recommended best places to start in terms of, I guess, doom scrolling, all of the negative media? I started watching mainstream news when I was at my grandparents', and that stuff's awful.
What was it?
Oh, just mainstream news.
Oh.
Like, it's just constantly like invading your brain with negativity. You couldn't design a more negative space. Like,
No.
How would you recommend? Because, like, for me, that's what I think about. It's like, if people want to start getting to a point where they can shift their beliefs, they need to get to a point where their mind's free of information, right?
I guess one question to ask would be like, when you're sizing up the ponds that you're choosing to swim in, and obviously as ubiquitous as the news is, it's still a place that you're voluntarily participating in. Like, are my tears and nightmares their recurring revenue dollars? Yeah. And if the answer is yes, are they actually looking after me? Are they actually informing me to be more prepared to get through this thing and to like elevate myself and the people around me? Or am I just kind of a statistic on their docket? And I reckon in terms of the news, I can barely watch or read any of this stuff because it tends to be supremely short-sighted, negative, inactionable, etc. I tend to avoid it, and I don't think it has a lot to like say for itself in terms of providing, I guess, what you could call like redeeming social value, even though it's entrenched as something that you're like supposed to trust. And so I guess it's a good question. So I would first ask the like tears and nightmares question. I think that would be helpful. But then to me, the other thing could be like, if you look yourself in the mirror about this stuff, you'd be like, am I getting some kind of like morbid satisfaction from this freak out? Is there like an addictive quality in this for me that I'm actually like enjoying in the same way that occasionally, in overindulging any other vice that makes you bounce up and down, like, is this a destructive addiction, in other words? And to me, I guess a question that I've been taught to ask on the coaching side, that it also is then helpful to ask yourself, is like, what gets them the best result? And then you could ask for yourself, like, what gets me the best result? And if you have the benefit of, a nuclear family, like children, a spouse that you want to be elevating, how do I help them get the best result? Is it failing to get my head out of this thing, this like noise device, and then sort of bleeding that onto them? Or is it something else? And so we had a good conversation last time that resulted in thinking about sort of like journaling about what you want, what you're settling for, etc. It would be returning to that and be like, what is the most important thing that outcome I want for myself, I want for the people around me, I want for my community. and really seriously thinking through what that is, I recommend always putting it on one side of one piece of paper and putting it where you can see it. So it's a neural anchor that sticks. And thinking through that prism and being, okay, so I've defined what I actually want. Is this stuff that I'm currently doing or defaulting to, is it actually helping me in that direction, or is it wildly counterproductive and self-defeating? And I do think that spinning, unless there's some kind of like professional responsibility that you have to be like wading in those sewers all the time for the sake of, because you have to be knowledgeable about it. I do think that picking your spots with respect to exposing yourself to that stuff makes all the sense in the world. And yeah, that's more or less what I would say about that. The other thing would be, someone who spent as much time with this stuff as me in terms of like the theory of it, the execution of it, and then helping other people with it. People in like that spot with that level of experience should, if they're worth their salt in any of this, be able to give you a couple of pieces of information, like hard-won optimism that delivers you out of the miasma of uninformed and informed pessimism. And so for me, like one of them would be, I found peace in this because he did this for me. Peter Lynch, who I've talked about on previous podcasts that we did, his observation in, I want to say 1992, was that the chairman of the Federal Reserve can't tell you what interest rates are going to be in 6 months. And so if the chairman of the Fed couldn't tell you what's going to happen with the macroeconomy in 6 months, the person who decides everything for all banks, how could some guy who writes an article at a paper, how could some pundit that's trying to scare the crap out of you in his column or on TV or whatever, like why would any of these people, if that person couldn't? And so as they say, like wisdom is the art of knowing what to overlook. You can overlook all of that crap because it is exactly that. It is crap. They don't know. And anyone who claims to know over and over and over is a charlatan out for like your psychological blood, because that is their lifeblood, their recurring revenue. And so to me, like that, knowing what you can safely overlook is important, but then it's not just about removing that and creating a void. It's also then intelligently putting something in the void's place. And that's where it goes back to what we were talking about, like finding your own purpose and finding your own informed optimism, finding something that you believe in terms of like your outcomes in life. And companies, I think the most common place where you can find this is companies that are actually going to inevitably create a transformation that you believe in and are excited about, and then become as informed about these things as you can, active as you can, and just keep your head out of this inactionably negative crap. And one question, because as you can imagine, volatility comes up a lot with me, with people who go through fine fat fish, people that are on the other side of it that are dealing with volatility, because you can't hide from volatility. You can one thing I will definitely say is that low risk, high reward investing does exist. That is a possible thing. But the trade-off is that you need to front load the work. You need to really put in effort to find those opportunities, and you need to let them play out over a long period of time. And you can't hide from volatility. At some point, there's going to be a nonsense either rip or dip in the shares. That's just going to happen. And so you need to be prepared for these things in advance. And so one thing to consider would be when we're thinking about companies and, economic policies and all this stuff, and then we're thinking about, like companies that are changing things, preferably on like a global scale and like a before and after in humanity scale. Is there anything in the world for you right now where if you compare Donald Trump's presidency to that thing, it is literally like a pimple on the ass of what matters? As scary as this is, it is absolutely like a drop in the bucket compared to this.
Yeah, there's active stuff going on that's much worse than that, right? It's just about how often it's in your face.
What I mean is not worse. What I mean is bigger. And so as important as the U.S. presidency is, as scary as it is to have someone who's seems to be as belligerent among many other adjectives that you could use, like come back into office and like all of the details of that, as scary as that could very justifiably seem to somebody, there are things that are going on, and feel free to disagree if you want to, but I don't think it serves you, that are much bigger deal than who is U.S. president for the next 4 years. There's bigger stuff going on.
Always, yeah.
Yeah, and so if you can find that for yourself, for your family, for your community, but then also as investment opportunities, that's just a much more profitable and enjoyable place to live your life. And now, of course, if you're listening to me say that and you're like, well, that is like amoral crap, somebody needs to be in there like changing this. It's like, okay, then like how about you take that energy and bottle it and like dominate the political operations in your community for the good. But what it shouldn't be is just like sitting around like passionately complaining and doing nothing one way or another, be it economically, politically, whatever which way. Take that monstrously negative energy and transmute it in a better direction would be the thing to do. If you're serious, unless you just find entertainment factor in sitting around complaining with Cheetos dangling out of your mouth, in which case that's your prerogative, but don't like kid yourself.
Yeah, that's the main piece. One of the things that I'm thinking about hearing all of this, and I feel like I'm just coming out of it right now talking about pivoting beliefs, is that if I'm invested in a US company, I personally feel like, you know, the US government, which administrates the companies in the US to a degree, right? Trump, or whoever the US president is at the time at any stage of history, is essentially the CEO of that wider company, i.e. president. I don't know how the US political system works at all. But because they're in that position, they influence the business somewhat, is like how I think about it. But in reality, they have the influence only in a regulatory manner, if I'm correct in saying that. So really, when you're invested in a US company, you're not invested in anything but a US company. It's not like you're invested in like the whole market. Like if you're just in one company or several companies, you're investing in those companies that are influenced by the regulatory standards under the administration and government. But that's it.
Yeah.
Yeah.
That's interesting. So what comes to mind, it might not be exactly what you're looking to put across, in which case, like point counterpoint. But basically one thing that I hear from that, just from my own perspective, is, you know, I'm about as aggressive, like the closest thing that I am to being partisan about anything. I prefer to live in a world where there are 15 or more right answers to every question all the time. I am much closer to being partisan about being an amateur focus investor, where you're doing it yourself and you're investing in as few as possible versus just kind of take my money and just spread it across so many things. Let me just kind of be asleep in the back seat. There's aspects when you think about how focused or diversified you should be. It is a pendulum. It is not just one company, like, you know, or every single company that's ever been founded. There's a balance, and something that's commonly overlooked, expensively so, psychologically and financially, is that if you're thinking about as one example, multi-trillion-dollar, let's say, American company that has ubiquitous global distribution, right, and all these other things, there's a sneaky amount of hidden diversification inside of that one company, where it is essentially operating as individual companies in like 200 different countries. And so it's almost like buying 200 companies that just happen to all do the same thing. And so there is a way where you can be like diversified in a concentrated way. And there can be ways that you are much more diversified than you seem while seeming extremely concentrated. And so for me, like when I hear you say that, I agree. Like sometimes when you buy a US company, it isn't just a US company. It is truly like a global force. And that is not the same thing as a company that is like making the best sandwich in your neighborhood or like in your city.
Yeah. Yeah, that makes so much sense. When my head went to, when you were kind of going on that first piece initially, bringing up the countries versus companies line, my head went to Amazon. Like I just got some books from Amazon AU. And there's like Amazon AU, Amazon UK, EU. There's all these different branches, right? I guess how when you look to like get into an investment, how much of the process is evaluating how robust they are across, I guess, ways that they do business?
Well, you'd need to like come to your own philosophy about how to do it. Like I have a philosophy that if I tried to do it piecemeal, it would end up getting people hurt. It needs to be like a start and finish system that encompasses both psychology and strategy, stock picking and investing. But I mean, one thing to consider would be global distribution, global diversification. One would think that a company operating in 200 territories would be more safe from volatility and potentially risk than a company that is not. But I can't begin to explain how dynamic those kinds of ideas are. And from where I'm sitting, it needs to be any given investment. Like this is part of my thing why I respect companies that run stock newsletters well, but I don't believe that that model is the future, because I believe that to make a really powerful investment and to become powerful as a focus investor, every single investment needs to be personalized, not just to the person in terms of their like taste, time horizon, risk tolerance, everything like that, but also the company's life cycle. It all like there's multiple dynamic pieces coming together. It's not necessarily that hard to learn, not that hard to do, but I think it's almost impossible to generalize. And so it would need to be made, those decisions would need to be made on a case by case basis. But at the same time, there's no doubt that a company that is operating in every country in the world profitably is a safer investment from both a volatility and risk, like from a downside perspective, than a company that is only doing one thing hypothetically in like 2 territories. There's no question about that.
Mm. In terms of life cycle, I don't know why, but something that came to mind is like, I was just thinking, life cycle, what companies don't die, because a lot of businesses go out of business. That's just the nature of things. But where my head went to was like Ford Motor Company, right? Like they started in the 1800s and still cranking to varying degrees in different places, ups and downs. When you look for a life cycle in a business, how do you evaluate that in general?
The life cycle of a business. Well, unsurprisingly, because like I said, he's the Michael Jordan of the space in my view, as both a practitioner and writing some mainstream things decades ago that still apply now, is Peter Lynch's observation that there are 3 lives of a company. You have creation, duplication, saturation. So creation is essentially your hypothetical, you're figuring out what you do, who you do it for, why you do it, etc. Anybody who's ever spearheaded like a startup knows that period well. And then you have duplication, where in my definition, I'm kind of like branching now into way that I define this, is you know exactly what you do, who you do it for, and why. You are now profitable and you are successfully duplicating into other regions. And then the third would be saturation, where essentially you don't have any more avenues to expand in terms of, let's say, like revenue, etc. Like you can't create more stuff, sell it to more people, etc. And so now what it becomes about is quote unquote maximizing shareholder value. You tend to see a company like slap a dividend on it and talk about sort of earnings per share rather than expansion. It becomes about optimization, I think, rather than expansion. And each of these phases can go on for a really long time, but those tend to be the 3 big pieces. And companies that don't die are essentially able to, from my perception, continue with duplication. And then when saturation happens, they're able to find a renaissance where they're able to create something new and continue expanding. And so, I mean, if you want to take Amazon as an example, the core creation of Amazon was the world's biggest bookstore. which then became Amazon Prime, which then continued to duplicate and expand into something where they're now trying to have it be that if you make eye contact with your phone for 20 seconds, they know exactly what you wanted. And like on eye contact, now there's a drone sending you what you requested, and just optimizing the bejesus out of that. But then because this has been so global and profitable and inevitable, it then creates money that they can then deploy into like catalysts. And so Amazon Web Services began as a catalyst, and now they're very capably moving into like pharma and so there's just, they have been able to continue sort of duplicating and avoiding, I think, excessive saturation while creating and launching new catalysts into the world that then a lot of them fail. And if you listen to Jeff Bezos, which as in mental exercise, I wouldn't not recommend. This is a much better place to put your brain than the news, for example, is like Warren Buffett's letter to shareholders. I think particularly Jeff Bezos' letter to shareholders, and just see how the most lucid people ever to do it have done it, like what they think about. That's way more helpful to you than obsessing about whether you are like left leaning or right leaning. It doesn't matter. Like whether you're all over Fox or MSNBC or whatever. Objectively, if you're trying to like get through this thing and retire on your terms, only have to retire once, create a legacy for your family, there is no doubt that spending at like siphoning some time off of this just like horrifying hellhole that everybody's screaming about and going here where it's actually like quite informed and optimistic and lucrative and like nobody's talking about it, that's a good use of time. And if you were to do so, one of the things that you would run into, and I think Buffett and Bezos share this, but I'm thinking particularly about Bezos, is there's a real bravery about failure. There's understanding that most of the creation initiatives are going to fail despite Amazon's vast advantages in terms of human capital, data, experience, technology, everything. There's still, most of these are going to fail, but the ones that don't can like catch fire and become their own beast. Those are definitely not his words, but those are my words.
Yeah. I listened to a podcast once of Jeff Bezos on Lex Fridman's podcast, and the way he thinks, you can tell why he got to a point where he's owning this massive hegemon of a business, right? Like, obviously he's just a shareholder in the bigger scheme of things, but he's super intelligent. And I agree, even if you don't agree with someone's politics or standing, listening to super intelligent people isn't going to be a waste of your time if you can extract some knowledge that can better you in your life. One of the things that I think underpins that piece on failure that kind of was ringing through my mind as I heard you speak on it is openness. And I think it kind of plays into even speaking about, politically loaded topics like the US president, like multi-billionaires or trillionaires or whatever. How do you practice openness on a personal level?
How are we defining openness?
The tendency to stay away from tribe-like thinking in terms of bringing up negative emotion, so like staying away from like all that kind of bad news stuff. And like,
I think once you know what you're doing, you can, and once you know what you're doing strategically, and then you experientially have a significant amount of riding time, it becomes much easier to deal with, because you just see that the average person in the average sort of dinner table family screaming about it with their entrenched familial assumptions that they're passing down like hand-me-downs from hell without thinking about it and just not making progress. Like most like clots of people are at all times on the wrong side of things. And it's not because they individually are stupid. There's something about mob mentality that just causes us more often than not to be like zigging when we should be zagging and otherwise. And so for me, like, being indoctrinated into gambling when I was 6 years old, and then being active as a focus investor with like blood money since 22, it's just made really clear to me that if you're looking into, you can, first of all, if you're following the right things, you know what to do, you know what not to do, you know what to research, you know what to ignore, you can just tune that stuff out for reasons I have already described. Like you don't need to be up on the latest doomsday prognostications anywhere because of that one thing that I just told you about Peter Lynch from 32 years ago, where it was like the chairman of the Fed can't tell you where interest rates are going to be in 6 months. So if he can't tell you, then no one can tell you. Therefore, you can ignore it. Anybody that tells you otherwise, you can just ignore it. That's a belief that I have that siphons stuff off. And so that being the case, you can just remove most of that crap, and you can understand that when people are squawking about it, it's just this really sad mainstream game of self-defeat. And so it just makes it easier to do your thing. But if anything, if you're going to look into it, this is like, gamblers have a term for this called fading the public. It would be for the sake of profiting from mass panic, understanding what people are chattering about so that you can like bet the opposite way on it.
What was the gambling term again, sorry?
Fading the public.
Fading the public.
Fading the public. And so that term applies. I'm not enmeshed in the day trading world. I am sure that philosophy for the very few people that are hyper profiting as day traders, I'm sure that's a huge part of what they do also. But you meet a sharp gambler, that's what they're doing. And so they want to know what people are squawking about on the news at bars so that they can bet the opposite way. And so you can apply that to long-term investing if you want. I think it is much more peaceful to just strip the whole thing away. But I think that you could make incremental improvement to your performance at great emotional expense and the possibility of making a mistake. If you were to go in and be like, okay, how can I profit from mass panic today or like this year? You could do that. I don't really think that that's a great path for most people. I think for most people, the best thing is front load the work, intelligently do as little as possible, reap the rewards. But that is available to you if you've built the tools to make it available to you.
I feel the pull of, I guess, that negative thinking constantly, especially like being in Wellington. It's like a very politically loaded city. In the barbershop, lots of circulating opinions, and I feel like you're almost forced into having an opinion when everyone around you has like a opinion, even if it's not nuanced, even if it's not well thought through. And the conclusion that I've personally come to is that there is no clear-cut conclusion. That's the nature of politics. That's the nature of business and understanding these fields. But I guess for people that are like entrenched in that thinking, that are, I guess, firm nature of the way things are, what's your experience been like coaching those people out of that? Well, I feel like that's kind of a big part of what you do, right? And
that's a really interesting question. Yeah, the human element of this is always the most important, and to me the most interesting, which is why I crack this the way that I crack this, rather than just sort of not dealing with people and just like exploiting patterns, which plenty of people have done with great effect once you understand what those patterns tend to be. However, understanding people can make this easier as a performer yourself and in helping others. We've talked a lot about sort of like Jungian archetypes. It gets a bad rap, but only for people who understand it superficially, like Myers-Briggs. For me, understanding the 8 cognitive functions and how they show up in the person sitting across from me makes me much more able to help them understand where they're coming from, where their super strengths are, where their blind spots are. And as we've talked about, understanding sort of the distribution of those 8 cognitive functions helps you understand that, number one, the average person does not trust their gut. They do not like the invisible. They do not like the intangible. They want it to be physical, tangible. It bleeds into the real estate conversations that we've had, and why people tend to like hoard like cash and gold and guns when they get scared. We like go into ourselves, and that's where most people are. And that, knowing that, has made the average person quite exploitable by every industry that we're talking about, both entertainment and finance, I reckon, also education for that matter. So there's that. And then the other thing is, a huge chunk of people, maybe not most, but a lot, at least half, I would say, are about fitting in. And so, and that's just on like an internal, like nature level. When you actually are then in a hive mind and it's like a nurture thing and a culture thing. Yeah. Like most people do not want to stand out. And as we talked about previously, being a contrarian, you know, it's like a buzzword. It's like, oh, I marched to the beat of my own drummer. I took an extra 15 minutes to do some jazz yoga during my lunch break. It's like, that's not being a contrarian. Being a contrarian is like running the risk of being tarred and feathered because you believe something that scares the tribe that you're in. And so that is hard. And that is a consistent sticking point that I've run into, just personally, but then also in helping people learn how to do this themselves. Is this like I'm essentially unable to have productive conversations with the people closest to me about this. And I'm like, yeah, that comes with the territory, unfortunately. And so one question that asks is like, what communities should be made available for misfits, like effective misfits, and that are gonna stick with this, and they're not gonna like throw themselves back into the boiling pot with the crabs that are gonna like stick with this. What is the right ecosystem for them? But yeah, I just think that, you know, most people listening to exactly what we're saying right now are probably going to tune it out because it's unpleasant. But if this like resonates, then understanding that like you're definitely not alone in that is really important. I think at that level, as we were saying during our last conversation, to develop as much self-awareness as possible about how you tick and what you want, and then to seek out community in the pursuit of what you want, like as needed, as desired, would basically be what I said. But it is no joke, like being like a black sheep or a contrarian or a misfit or whatever. It is like by definition uncomfortable, but at the same time, like I jotted this down and I would want to reiterate it, like thinking about the 80-20 principle. I have seen enough to know from pursuing fine fat fish the way that I've done it for as long as I have, it definitely is inevitable that 80% or more of the money will always belong to 20% or less of the people. That is an inevitability for an incredibly complicated web of reasons that I think are being enforced with every single piece of nightmarish news that comes out, and like a Netflix education piece that scares the crap out of you about Wall Street, et cetera. Every single thing that happens, it's like pulling this thing tighter and tighter and tighter. But at the same time, it is possible for 20% of the people to control 80%, to take 80% of the intelligent action and have 80% of the money. Not just like 20 people, where now Elon Musk has more money than 65% of the United States, roughly. And people are still talking about diversification like that. It's gone too far now. But it is possible for that to happen. And so I think it is important to understand that if you are feeling alienated by dint of your own instincts, it is an invitation really for you to take a crack at being one of those people, because it's not going to be the people that don't feel like that. Those are going to be, they're guaranteeing themselves to be in the 80 that owns the 20. But by being in the minority, if you take powerful action, if you can figure out ways to like spin that serious predicament of feeling like outnumbered, misunderstood, whatever, to your advantage, you can enter the game in a way that you can elevate yourself, your community, your trajectory. And so yeah, it's, you know, it's like a hero's call to action.
Yeah. As soon as you're feeling like entrenched by it all, it's a sign that things have gone too far. Yeah,
but also it goes to show that like it's self-evident that most power, money, whatever, is held and owned and operated by a minority of people. If you're ticking like the minority and you're seeing the setbacks of that in your day-to-day life, just like trying to get a cup of coffee and make small talk about what you think is interesting and people look at you weird, that kind of stuff. And like you actually say something honest to someone about what you see happening and people are just like, ugh. Like you then probably do have some of the makeup, maybe not all, but some of the makeup of someone that can close that gap. The question is, what do you do with it? And what I'm saying is what you do with it is you develop as much self-awareness about how you tick and what you want is possible. And then in pursuit of what you want, in getting after it, both purposefully and also just in consequence, people like you will clot and show up, and you'll know them when you see them because you spend so much time thinking about that.
That makes sense. Just going back to volatility for a wee bit. You mentioned earlier that you can't avoid volatility. There are some people that you were saying there are some people that can avoid it effectively. How do they go about that?
That can avoid volatility?
Yeah.
That's impossible.
Oh yeah.
Because here's the thing, right? So like you can be extremely diversified. You can hand this off to somebody else and spread it across, like, let's say that, like if there was, hypothetically speaking, like an S&P 5 million, and so your money is spread across 5 million companies and somebody else is running it, et cetera, you're still going to run into fear about what's happening, all of the fears that we've been talking about. And so you're going to be dealing with the gut-wrenching knowledge that the economy is bouncing up and down, that your investments are bouncing up and down, even if you're super diversified and you've handed it off. And there is absolutely no guarantee at any time, regardless of diversification level, that your total investment couldn't drop 80% in a month based on noise. And it's very possible that we could be in that spot very shortly. It's also very possible that this might not come back around for a long time. You don't know.
Yeah.
But you're not prepared. If you've invested in a way that your money is not going to drop to zero, and like risk from that definition is not in the equation. Okay, it's not going to poof and vaporize, but it could still drop 95%. And when it does drop 95%, are you going to be in psychological shape to capitalize? Or are you going to panic sell at the bottom, curl up in the fetal position, and like turn this into a lifelong trauma? And that is, I believe, a predicament that no one can escape. And as we were talking about with Peter Lynch, I believe last time, who was the best investor of the 1980s, turned 18 million into 14 billion in 13 years, wrote through 3 books saying that he would have had better results at less cost if he had been an amateur sitting on his couch, because he would have had freedom of choice and freedom to focus rather than have to professionally diversify. Even when he was running people's money hyper successfully, people couldn't stomach volatility even when he was the one holding the ball, and they took the ball back at the bottom. And so you can't hide from volatility. The best that you can do is prepare for it, unless you're literally just going to take all of your assets and like bury them in your backyard. But then you're dealing with inflation, et cetera. And so, but that would be the only way that you could hide from volatility, is to refuse to play in any way, both in terms of like any asset that could bounce up and down, from real estate to stocks, et cetera.
Is there anything that you want to wrap on in terms of volatility for today?
I think I would just want to look to like stitch together the very important, also very emotionally and tactically complicated thing that we've been talking about, stemming from your mother's very important declaration that she's going to be chill despite the fear. Understanding that it is inevitable that 80% or more of the money is going to belong to 20% or less of the people, because 80% of informed optimism and intelligent action are going to be held and taken by that 20% of people that are going to make and dominate all of the money. If volatility is to rear its ugly head over the next, let's just say it gets real bad during Trump's presidency, let's say that that's your preoccupation and that happens, it's really important to understand that that will be the moment that decides who is going to be part of the minority that owns the majority. And so the worst thing that can happen is for you to have no conviction in where your life is going or what you're doing, have no ownership or vision over your situation. It falls 95%. You and your friends are pulling your hair out at the breakfast table, and then you grab your phone and you impulse sell everything at the bottom. That is how you guarantee that you are going to be in the majority that owns the minority. The best spot you could be in is to have prepared for this very well in advance, and to be taking active strides on a regular basis, so that if and when the sky comes falling, you're smiling or at least a little bit bored because you saw this coming. And then you're prepared to, as they say, like buy when there's blood in the streets, or at least not like shit the bed and fall apart. And that is more than anything, on the investing side of things, what it is imperative that like Fine Fat Fish helps people do.
So